Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Well, good day, y'all. Ira Epstein of Linn & Associates with your metals market update for. We are now on the first day of summer, Wednesday, the 21st of June, 2017, just after 1:50 p.m. Central Daylight Time. I like that the gold is up. Now, it didn't close this high. It's going to settle around the 1246, 1245.80 level, but an up day, important. It's taking it back to some important averages. You want to get crazy, look at copper. One day up 300 or 255 points, down 300 the next, and today up 400. Something for everybody, I guess, but it's a difficult time. Now, the question is, what's getting into gold that it's even getting this bounce? Could just be technicals. It could be the dollar's a little weaker against other currencies. And it could be what was subtly said when President Trump thanked China for their efforts, but they have failed. What does that mean? I think you're going to look at a series of sanctions coming out against those that do business with North Korea, and it may involve China, and this market might be beginning to sense that that couldn't be involved. How they do it? Well, politically, they got to be careful. They don't want to cut their legs off of our trade deals with them, but they're going to put pressure on. They're not going to let this go, so let's wait and see how that comes about. Take a look at the pattern. Higher lows, higher highs. Yes, you are under this week the 18-week moving average of closes. There's 2 days left. We'll have to see how this all plays out. But for the week, that's what you're down. Remember, that's still looking at the June gold, which I think it goes off or it's gone off the board because the next contract, August, has a higher price. And you can see that the market's starting to get a little bit of a bounce. A day is not a trend. A day is a bounce and no more than that. This market's in a down thrust. You can see how the thrust went. And in fact, today's low at 1241.70, I didn't even update it, but that, if you take a look, made a lower low coming back up. Obviously, you want to get over that 1250 area. In fact, today's high is very important because that would set in what I call a swing line low, and it could set the market off in a number of different areas. It would even set up the potential for what we call window envelope bottom lows. As we take a look at the swing line, lower highs, lower lows. As I said, you got to come up there to set this as a swing line low, but you really got to get over 1258.60 to say that the trend is over, or you got to create a new chart pattern. It's that simple. What price is the market probably reaching for? Why don't we say the 100-day average of closes? That's what I think it's going to be reaching for here. I don't see it getting up to this height yet. I would expect it to get there and stall around. We'll see if it even does. Why do I think that? Because you went down to the Bollinger Bands and you're now turning away from them. You rode them 3 days in a row down. The market is not embedded. It just is oversold. Often oversold conditions against the Bollinger Band cause a bounce away from it. That's all that I'm saying. It is not a trend change. You could even embed from there. But the likelihood of seeing a bounce is increasing at this point. When we come to the ETF of GLD, oversold, not embedded, but this one could embed as early as tomorrow. The battleground should be the 100-day average of closes, 118.71. Remember, what was support on the way down is resistance on the way up, and that's going to be a very important chart. We have to watch it. GLD, that was. Now we're going to go to the gold miners. They could embed, but if they can get over 2220, it's not that far away, they'll negate the bearish pattern of the swing line with lower highs and lower lows, and if they get up there, it might be enough, especially if you can make a run to the 18-day average, to not embed. If you embed and lose it right away, that would be bullish. But when you embed, guess who takes control of the market until that embedded process is lost? The bears, and they get very aggressive typically with that type of position. As we look at the gold-silver ratio, up to 76.02, blasting through new highs. So anyone that thinks at this point so far that silver is a better investment than gold, well, they're wrong. You need more and more ounces of silver to get an ounce of gold. That's what the chart is telling us. And when you look at the silver, it too might embed as early as tomorrow. It's riding the Bollinger Band and it's showing no sign of bouncing. That is what's wrong with this market, and that can be ugly. Now, it's July silver that I'm watching, and that's still where the volume and open interest is, but this is going to change next week because as we approach the first of the month, if you're long, you could take delivery and people will scoot out of that market into probably the SEP contract. In taking a look at the copper market, well, outside day up. So this is what I was telling you. Take a look. You're up 255 points, and this was Monday. Yesterday, you dropped 350 points. Today, you're up 425 points. I mean, if you can withstand that, great. Which way do you trade it from? I don't have the slightest idea other than to say today the market entered the bull arena. It will have, and I can move this line now, this arrow here. I'm going to say it's got higher lows, higher highs, next stopping target, the combination of 262, let's call it 85, which is the 100-day moving average of closes, and the upper Bollinger Band of 263.15. We'll see what goes. Momentum just trying to turn over where the red number's now just gotten over the blue, so it's trying to point to the upside. In the platinum market, notice how this market's trying what gold is doing. It's trying to turn itself up, and getting over 920, 910 would be enough to say, uh-oh, it's made a turn. Now, it's still got plenty of time to trade. It's already settled, but if it can get up another $1, it will have accomplished that. In the palladium market, you are overbought, still in a very much of a bull trend, and they are buying, in my opinion, this versus the platinum market. The dollar index, the upper Bollinger Band, is stopping the rally. It is overbought. The question is, can it burst out to the upside since it's in an uptrend, or is this enough to drive the market back down to the 18-day average where? At that point, I would expect to see buying on surface. Now, the problem with buying is if you get under 96.75, you're just going to enter that period of wishy-washy. You'll lose the bullish swing line pattern of higher lows and higher highs. Therefore, I think that what you're going to see in this market is very interesting in terms of that 18-day average and how it's going to play itself out. So when I look at it all, I like what I'm seeing in metals from bear sides and bull sides. I am not seeing a breakout one way or the other on them. The gold market at best can end its downtrend. It hasn't begun an uptrend. We've been in an uptrend in the palladium, but it seems to be running out of steam. If you like to do analysis like I do, I can teach you how to do exactly what I'm doing. And I challenge you that I can make you do that. And in fact, I can probably get it all done for you in 2.5 weeks at just minutes a day. How I do it is I created a course with 54 videos, and they are really done like you're in a classroom with me. You're going to open up your charting software that comes with the course. You're going to go to the exact date that I have on the chart, and you're going to follow everything that I'm doing. You do what I do, you do the same. And you're going to learn how to work with swing lines, Bollinger Bands, window envelopes, moving averages, all the 5 tools that I use in the way that I use them. And then what you're going to get is access to my research, not to trade right away. I want you to learn what you're doing. But these videos that I do every morning at 8:30 will show you on the swing line, look at, here's what I just learned. Look how that's working. Look at how that Bollinger Band's coming into play. Look at those moving averages. Now I get what Ira means by window envelopes. I see how it's unfolding. That's what we do. And you keep that up, and away you go. You learn the technique. Can you add to it? Of course you can add to it. I invite you to do that. But the key is to get all this. Now, my research and the morning video alone is $60 for every 30 days. The charting software is $99 for the 30. That's included in the course. That's $155 roughly, right? The course retails with the whole thing for $99.95, and through the rest of this month, I am making the course available for a discounted price of $20 off that, or $79.95. No shipping, no handling, none of that nonsense, as I call it. How do you take advantage? Write down IRA 20. That's all. And when you go to our website under the word education, go down. When you eventually get to buy the course, type in IRA 20 in the coupon area. You can always call my staff have your credit card ready. They'll get you all set up. You can also click up here if you're watching me off of YouTube. It'll take you right to the pages that you need. And, of course, we have a facts section and all that teaches you how to work with this. I'm Ira Epstein. You have a great day, and I'll see you tomorrow.